Okay, welcome everyone. It is Friday, December 11th, 2020. We are almost through the year, and my name is Danielle Lazier, and I am a realtor here in San Francisco and have been since 2002. And so thank you so much for coming. I'm excited about our talk today, and we're here to talk about San Francisco real estate, and I've got an expert panel with me as well. So it has been a strange year, and I am not here to be a health expert or a government authority or an economist or anything else like that. I am here as a real estate professional specifically. And on the whole, I would say that I've been pretty proud of the San Francisco realtor community through this pandemic. We were lucky enough to be considered essential fairly on into shelter in place. And I think across the board, for the most part, people have taken that very seriously and put safety first. And we've just kind of kept our heads down, followed the rules, and therefore have been able to actually transact this year and to help people buy and sell. And I'm very grateful for that. And certainly my team has put safety first and amazingly figured out how to still sell and be efficient about it. So clearly, in terms of real estate, the pandemic has upended a lot of what is normal, quote unquote. So typically in November, you start to see a seasonal slowdown, and we have seen that. However, it's much busier this year than it was last year. November was much more active in real estate than November of 2019. And my guess, even with the new shelter in place, is that December numbers will show the same. So keep in mind that every real estate listing is really different. And when you look at data and statistics, especially in a very unique and small market like San Francisco, it doesn't mean that that's how your particular home is going to fare when you go on the market. Nevertheless, I thought I would start us out with just some basic market data of what's going on. Okay, so over the last 20 years, home prices in San Francisco have gone up 251% since the year 2000, just to kind of keep things into perspective. Now, looking more granular, if we're looking at a 3-month rolling period from September to November, year over year, what's been going on? So it hasn't been a great year for condos, and the median home price for condos is down anywhere from 6.5% to 12%. And that varies based on the size of the condo and the neighborhood. So the smaller condos, the studios, have gone down the most, and the larger ones have gone down the least. And anecdotally, that kind of matches with what I've always seen in downturns here. Kind of your classic San Francisco Victorian Edwardians that are in the neighborhoods are more resilient than the studios in high-rise buildings south of Market. And add to that, with the pandemic, the smaller buildings with single door entry in a neighborhood with greenery has been more COVID friendly too, and probably less affected by the mass exodus for work from home folks. Let's see, what else do I have for you? Long-term appreciation, I would say, remains pretty stunning in the condo market, even so. But short and medium term, you're going to need to reset your expectations. If you're looking at an appraisal that you had for a refinance, say in 2018, 2019, you may be disappointed by what you see in the market. Again, depending very much on where you are and what type of property you have. But things have changed, and anywhere from 2 to 5 years of appreciation, we've seen disappear in some condos pretty much overnight. And the single family home market has definitely been more resilient through COVID across a few different metrics. So when we look at how busy things are, we look at the percentage of listings that go into contract in any given month. Like, there's listings on the market, but how many of them are actually accepting offers? And for single family homes, it's at 35%. And at condos, it's at 17 or 18%. So there's a big difference there. But also keep in mind that that means that 65% of listings of houses did not go into contract, and 80% or more of condos did not go into contract in November. And across the board, from 2020 to years prior, we just have a lot more listing inventory. And it has been a change to a booming seller's market for the first time in a decade. So what is my prediction in summary? We have already started into the recovery phase of the real estate cycle. And my prediction is that we will continue in recovery zone well into 2021. So as vaccines become more readily available, but also administered and more a part of the general population, as employers start to bring their employees back to the office, even if it's only for 1 or 2 days a week, and as people kind of get bored of living in Truckee and living in Boise and living on Maui, although maybe you wouldn't if you're living on Maui. But as the city kind of comes back to life and people continue to come back, I predict that we're going to continue to see recovery. So what that means is that you are going to continue to see some good deals for savvy buyers out there. And I think interest rates are going to stay very low through 2021 as well. But results for sellers are going to remain really mixed. So I should say not perfect, nothing's perfect, but properties that like tick the boxes. You've got the functional floor plan. You've got the good location. They're in good condition. And then the sellers do all the right things. They hire the right listing agent. They have the right list price. They have the right staging. They have the right marketing. They will continue to thrive, but you're going to see mixed results across the board because we're definitely still in recovery. And my main tip and point is that over 20 years, the most important thing you can do when you're selling your home is to price it correctly out of the gate. And in San Francisco, the recovery tends to have a whiplash effect. You're back in a seller's market before you even know it has happened. So no one times the market perfectly. And if they do, it was by accident. And so that is kind of how I'll leave that. And now let's move on to our panel. I'm going to start with the super exciting stuff, taxes. Yay. And with our CPA. So Ricky, if you don't mind introducing yourself, that would be great.
Sure, Danielle. Good morning, or I should say, good morning, everyone. I'm Ricky Huey with HRH Accountancy Corporation. I am a CPA firm in the city. I help individuals and small business owners out there with tax advisory and planning work for the greater Bay Area. That's essentially what I do.
Awesome. And thank you for joining. You work with a lot of both real estate agents and people who own real estate, yes?
That's correct. Absolutely. Yeah.
Okay. So what are the most common tax considerations and advantages in residential real estate?
Well, for residential real estate, what I see with my clients who are buying a primary residence for themselves to live in, it usually means they have a mortgage. And when they have a mortgage, that triggers what we call an itemized deduction. Many of you may or may not know what itemized deduction is, but essentially the government provides you with a standard deduction automatically, or you could itemize. What qualifies under itemized is mortgage and property taxes you pay on your home. Traditionally in the past, you would get a little bit more write-offs with the property tax, but they capped that off at $10,000. And with mortgages out there, the mortgage interest you pay on your mortgage is usually higher than their standard deduction out there. The numbers change every year for standard deduction, but for 2020, if you're single, it's $12,200. If you're married, filing joint, it's $24,400. When you buy a primary residence you live in, you usually have a higher mortgage interest and property tax combined, which triggers you to itemize.
Okay. And would it be wrong to say that a lot of the San Francisco buyers and sellers are itemizing? Would you guess?
Absolutely, yeah. If you're buying in San Francisco or anywhere, mostly in the Bay Area, you're probably going to be itemizing, which triggers a lot of opportunities for other deductions that fall into itemized as well, like donations.
Right, right. And another prediction, which I think is no longer going to come to pass, I had heard from a First Republic Bank economist that they were going to guess that this SALT tax cap would go away in a Biden administration. But I think that they were counting on us winning the Senate, or I should say on Democrats winning the Senate as well. So the SALT tax is still a benefit, Ricky, but not as much of one as it used to be.
Yeah, that's correct. It definitely still is an advantage, but for now, with like you hit on the point, it doesn't look like the Biden's tax plan is going to happen anytime soon. So I wouldn't stress too much about that particular tax at this point.
Okay, but you get to write, if you're itemizing, you get to write off up to $10,000 of property tax.
Correct, up to 10,000 of is really what it is, a state tax from your income and property tax combined. But yeah, it's up to 10,000 now. There's a cap on that for now. Yeah.
And then your interest on your loan.
Interest on your mortgage interest, and we could touch upon that a little bit more in depth possibly. But yeah, on your mortgage interest, there is restrictions there too as well. But yeah, that's definitely a write-off for you to itemized deduction.
How do the restrictions work?
So essentially, prior to the Trump administration coming on board, if you had a mortgage interest principal balance of $1 million or less, you could write off mortgage interest on that $1 million. If you have purchased a property after December 15th of 2017, that shrunk to $750,000 on the principal of your mortgage. So essentially, at the end of the day, if your mortgage, let's say, is $1 million today and you bought a property, you can only write off mortgage interest up to $750,000 of that. Of course, you don't have to calculate that. You can have someone help you do that, or do it online or somehow.
Of course. And is it no longer advantageous to own your own home?
Oh no. From a tax perspective, no. You still have a higher deduction when you have a mortgage interest, generally speaking. It would probably not be advantageous to own a home if you're looking at it purely from a tax perspective. If you're, let's say, you don't have a mortgage on the home at all, right, then there's no benefit there.
Right.
You pay the whole house off with cash or something like that.
That makes sense. I've over the years, a lot of buyers have come and said, especially the ones that don't have kids yet, have said, it didn't occur to me that I should buy something, but I have a really good job. I make good money, and my accountant's like, hey, you have no write-offs, and why are you paying so much money in rent?
That's absolutely right. I actually tell my clients, if they could afford to do so, just buy a piece of property, live in it. There's a lot of advantages, whether you keep it long-term or you live in it for a couple of years, you could get a nice write-off, or you sell and upgrade. There's always advantages, in my opinion, when you have a piece of property or asset in your portfolio.
Okay. And what about income property? What if you own your own home? And I guess part of my question is, from a tax perspective, would you usually recommend people buy a primary residence first where they're going to live and then consider a income property?
That's more of a personal preference. They're definitely treated differently. With income property, it doesn't fall into the itemized versus standard deduction. It goes into this completely different area on the tax returns called Schedule E. You want to get a little technical, but it's treated differently. One of them, it's something that you can own if you don't want to live in, maybe own a property outside of the Bay Area that you want to invest in. That's perfectly fine if you can afford to do so. So really, I think it really depends on the tax or the person themselves, what they would like to go invest their money in initially first in their situation, for the most part.
That makes sense. And so what are the tax advantages of owning a investment property? Not if you're a real person, but if you're just, you're a Google engineer, you own your home, you'd like to diversify your assets, you're thinking about buying a multi-unit.
Yeah, so it's always good to have a piece of asset, investment property for rental income coming in. Essentially, it depends on your overhead and costs. So you have to run the numbers to figure that out. But from a tax perspective, you do have one big tax advantage I tell my clients is the depreciation on that property. It's a non-cash deduction you get on the property up year over year. If it's a residential, it's 27.5 years. If it's a commercial property, it expands over 39 years. Essentially, you get this depreciation that can be written off against your rental income, which is a huge plus to absorb any taxes that you may have to pay on the residential, on the rental property and the income.
Okay.
So that's a huge one.
Do you get to take that with you if the property doesn't cash flow in the beginning, but down the road it's going to?
Yes, it does. I mean, there are some misconceptions and perceptions out there that that people don't see when they have a rental property. That I always tell my clients up front is when they're investing in real estate property, you could take that loss if you have a loss with you down the pipeline if you have a loss, but sometimes you can't offset that loss if it's a bottom line loss in a rental property against your other income. So you got to be careful and run the numbers. If your income is over 150,000, which a lot of people in the Bay Area are, whether you're single or filing jointly, it essentially phases out any write-offs you get on the bottom line of any investment property if you have a loss or a negative on your tax return. You don't lose it. It gets carried forward year over year and can offset your rental income or any other type of passive potential income. But you don't get a benefit to offset, using your example of the Google employee. It will not reduce their Google earned income or
Right.
potential RSUs they might vest throughout the year.
Okay, that makes a lot of sense. And what about second homes? That's been a popular topic this year, and I even did a webinar on that, and a lot of people have been buying or wanting to buy second homes. How are they treated tax-wise?
So second homes are a little tricky. It gets a little tricky. It depends on your intentions on the second home throughout the year. So if you were to just simply live in that property the whole time, you have the potential of some additional write-offs, but you're really going to be restricted simply because of what I said earlier with the whole 750,000 cap. That's the aggregate combined of your primary and your secondary home. If you had a second home before December 15th of 2017, it's $1 million. But at the end of the day, that's really the only benefit from a tax write-off that you really get from the mortgage interest. If you rent the property out, it gets a little bit more tricky on the whole 14-day rule. I won't get into that number too much, but we would have to consider how many days you rented that property out throughout the year, how much time you stayed in there. Then it could be split possibly between the itemized deduction and the whole Schedule E I talked about earlier with investment properties.
Okay. That makes a lot of sense. Now, before I'm throwing in a surprise question for you that occurred to me.
Right.
A lot of home sellers are curious. What are the typical costs of selling a home that can be tax deductible for them when they sell? Things like commission or preparation, transfer tax. Is any of that attached?
Oh yeah. That will add into your write-offs to reduce your gains on the property. Any costs you put into staging the home, any type of costs you put into, I don't know if you hear me okay, I have an internet connection, but anything associated with the selling of the home, that will reduce the potential capital gains on that sale of that property. Absolutely. Those are the common. Of course, you have the improvements, which is the huge one that I consult with my clients about as well.
Right. Okay. So the transfer tax too that the seller pays?
The transfer tax, you talk about property tax or the transfer of the property. That piece of it, we would probably, yes, I believe you can off the top of my head, unless there's some changes on that. But as long as it's on the closing statement, what we usually do is we comb through the whole final closing statement and we take out anything that cannot be. But for transfer tax, don't quote me on that. I should look at that again off the top of my head. But that may be a deduction as well. That's not usually a significant number.
Okay. So you heard it here. The expensive commission you're going to pay me And the expensive
That's
staging,
definitely a write-off.
you're going to pay Susie, and I pay for Danielle's work, is all going to come off of your basis, right?
Yes.
Okay, that's good. Good news with that. Now, Prop 19, I should have added this into my predictions. I do think that there will be more boomers who move because of Prop 19 in California. And so feel free to give us your caveat. I know this is not what, is brand new law, but if you don't mind, what is kind of a high level overview as it relates to a consumer who wants to buy a homeowner?
Yeah, if you're a homeowner out there, Prop 19 just passed, and yeah, I'm not expert, but from what I understand, is they just changed a little bit for sure on what's happening there. Essentially, any baby boomers or specific eligible homeowners out there who were to sell their property right now, essentially if you're over 55 or you have a severe disability or you're a victim of some natural disaster or anything like that, in your home, it might, when you bought it, your property tax is probably really low right now because you're a baby boomer, you buy at a low cost. But when you move, if you were to move to another home, your tax assessment, usually, generally speaking, goes up to the fair market value of when you buy the new home. So if your old home was 100,000 when you bought it, and your property tax was based off 100,000, and you buy a new home and it's worth 1.2 million, you could be paying taxes on 1.2 million. That's a huge jump. Prop 19 helps you transfer your assessed value to the new home, which is key to help keep the cost down for older individuals out there and severe disability or with severe disabilities or someone who's a victim of a natural disaster. And if you actually are 55 with a severe disability, you could actually transfer up to 3 times with Prop 13 to different homes, which is huge out there. So there's a big advantage there. One of the disadvantages, if you want to call it, is with Prop 19 is if you were the children and grandchildren inheriting the property, unless you're living in that property, their assessed value when they inherit the property goes up to potentially the fair market value. But in the past, it stayed the true cost of the parent or grandparent.
Right.
So
thank you.
So that's a big change.
Helpful. And I think I had a workshop on this yesterday at Compass, and it sounds like if you want to be really conservative, you should be looking at that April 2021 date for transactions. But really, that's right around the corner if you're starting to prepare to move to be able to close after April 1st. And there's also different limitations, or not limitations, but you can buy any kind of property you want, and higher or lower in value, and the assessment will vary based on that. But this is really big news because I have a past client who I helped sell their parents' home in the Sunset, but they live in a big house where they raise their kids, and they would prefer to live in a different area in a condo, but the property taxes kept them from doing that. And so I think this could potentially open up the market a bit. Okay, last question for you, Ricky, is are there any, what are some of the biggest mistakes or misconceptions you've seen with your clients when it comes to real estate and taxes?
Oh, well, one I touched upon is that whole, when you have a real estate investment property, they have this misconception that, oh, I'm going to have a big loss because of depreciation, overhead, I haven't rented out. I'm going to write all this loss off against my income. As I said earlier, you can only write off those losses probably against your rental income, not against any other. So that's one of the biggest ones right there. The other big one, I don't want to call it a mistake or misconception, but keeping good records at the end of the day, making sure you have a good process in place to track your rental income and your expenses, because essentially at the end of the day, it makes it a whole lot easier for you to see how your property is doing, and for your accountant who's helping you possibly prepare the return. And there are actually IRS safe harbor rules out there that if you keep your records in a specific manner, you could have a potential additional write-offs. I won't get into that in great detail, but there's this qualified business income that you could fall into if you have rental property, which could give you up to 20% deduction, additional deduction on any net income rental property. If it's at a loss, then there might be some tax planning where we shift it some ways, but there's that came out, Safe Harbor rule came out in September of 2019. So it gives you more of an incentive to keep track of your records in a good way.
I think just a final note on record keeping as a homeowner, and I'm guilty of this too, keep record of your improvements that you make for your property, because you might not sell your property for many years down the road, and then you're trying to figure out all these improvements that you made when you first bought it that will really save you taxes when you sell.
Absolutely. I have these conversations with baby boomers who have one right now where she lived in there for 35 years, and we're just trying to gather all her improvements and have it nicely organized. And, you know, some of it, you know, understandably, you're not going to keep track of, but, you know, you try your best to keep track of it now if you can, and it will pay off and be more beneficial down the pipeline when you do sell that, if you do sell that property. Absolutely.
So how can people find you if they want to talk to you more for tax advice?
You could Google me at HRH Accountancy Corporation. I'm on there, or I could, if you want to leave your chat open, I could leave my email address, and you could feel free to shoot me an email. Let me know you contacted me through this webinar, and I'll definitely help you out or have a quick chat with you, or just a chat with you if you have some questions, and help you out and go from there.
And I'll send everyone's contact information with the recording. So what is your website?
It's www.hrhaccountants.com.
Zoom has locked down the chat this year for security measures. Okay, so thank you, Ricky. And now let's talk to Danielle Lazier. Let's see if I got that even remotely correct. We were practicing earlier.
Yeah, Danielle Lazier works.
Okay, Danielle, please introduce yourself and tell us what's your role in all of this.
I own Lazier Media Group, and we do photos, video, websites, and we also we help market the realtors. So things like Facebook ad campaigns, you know, Matterport campaigns, you know, all that, basically everything to help list the property.
Yep. So you're who we go to when we need the photography done, when we need the video done, when we need the social media campaign done, the 3D, all of that kind of stuff. And so what have you seen adopted in 2020? Was there anything new since the pandemic?
Well, I think a lot of realtors are now using video and Matterport. I would say the smart realtors were already doing that, like yourself, have always been using a lot of these tools to, you know, to reach as many people as you can. So I would say 1/3 of realtors were doing videos. Now pretty much everyone's doing videos. In the end, I think the most interesting thing was the Matterport. Years ago, some people were doing Matterport, and I would just tell them it's not a lot of people are clicking on it. It's not adding any value. And we've seen a dramatic change in that, where there's huge value now in Matterport. But I think there are some people that like it, and they'll use it, and they'll use the Matterport to look through the property. And some people, it's just a lot easier for them to view a video. The most important thing is having a video that's short and concise. You know, 5-minute, 7-minute video isn't really gonna do a lot. You know, when we create videos, we actually create 3 videos each time: the 30-second, a 1-minute, and a 3-minute.
Mm-hmm.
So it's a matter of utilizing all of those tools to market the property.
Do you think that I'm definitely one of those agents who's been doing video for years, even starting with my own hand done videos. But I was somewhat resistant to the Matterport. Was introduced to it when it first came out and just seemed clunky. But this year, right away, I was like, okay, I have to start doing this on every listing, because part of our rules, like we were saying earlier, is that when we became essential, the rule is that we are supposed to show real estate virtually, unless that is not, I forgot how it says, unless it's like otherwise prohibited or something, but you want to view it virtually. And then you can only show property to two people from the same household at a time. So the 3D video started to make a lot more sense when you didn't have open houses. But it sounds like you're saying you still want regular video too.
Absolutely. Because like you said, it's clunky. I don't think everybody really, I don't enjoy using it, to be quite honest, but it's, but there's a lot of people that do. And I think it's the younger, I'm close to 50, but I think you've got younger buyers who are 35 and they're probably gamers, and they
have their Oculus on watching it.
Yeah, and they can click through that stuff and it makes sense to them, where for me, it just really, it doesn't. So I think it's really, you really need to actually market every aspect, the photos, the video, the Matterport. So you're actually accommodating everybody. One thing that we did, there was this thing that people started doing where it was a virtual tour, where the realtor it looked like the realtor was actually walking around with a mobile phone, but it was actually a professional photographer doing it, and they were talking over it, and they tried to make it look a little bit more simple.
Yeah.
I thought it looked ugly. And I was looking at the results and I was like, this is ridiculous. So what we did, we turned the Matterport into a video.
Mm-hmm.
And we started it with a drone shot of the exterior. Then it went into a Matterport video, and we had professional voiceover people in LA do a voiceover on it and talk about the property. And we found that to be really, really successful.
Kind of merging the different mediums.
Yeah. So that way there's ways that you can use the Matterport to your advantage. I just don't think a lot of people know how to do that. It's the other interesting thing is that we have a really great, our Matterport guy is really dedicated and he loves it. It's actually quite amusing. And he'll do the way he scans the property, it's more detailed, especially when you do the dollhouse effect. You can see it better and clearer. A lot of other companies are, that's what they want to get in and out, get paid, and they really don't care about the quality. So it's also about the guy doing the Matterport and making sure that they love it and they're actually doing the best scans possible.
That's absolutely true. There is a big range of what the experience is like of the digital media for real estate listings, depending on who you hire, and that's your agent's choice on who they bring in, and whether it's a more of an artistic vision or just super transactional. And then there's really cheap stuff that they market to real estate agents for us to do it ourselves from our iPhones. And in San Francisco, just is too particular and expensive to cut corners like that, I think. But what about drones? Has that been more popular this year? And can you explain to us what a drone is used for real estate marketing?
Well, with the videos, or some photos, of course, as well. So if you have an apartment near the ocean on the sun, in sunset, if you're going to take a photograph of that apartment building, it's just, from the ground, it just looks, it's nothing. But if you take it up and you're showing, well, just down the road, there's the beach.
Right.
It shows your neighborhood and your location. Now, the funny thing is, do you want to do that in the Mission when, if there's like not so pretty houses next door? Probably not. So it's a matter of utilizing it correctly. But for video, for instance, we're doing some stuff this year, which I'm excited about, where you can do time-lapse video with the drones. And we want to start all of our videos with just like a wow image. Danielle Lazier presents, and then the property. I think what a lot of companies do, which makes me laugh, they spend a lot of time with the drone flying around all over the place, and you're just staring at a roof. It does nothing for you. Ultimately, you want to get into the house as soon as possible. I think one of the biggest things that we're trying to push and help realtors realize, we're not just selling a dream home or a dream apartment. We're selling a lifestyle, and that's the neighborhood.
Right.
So if you these small little condos that that are sitting around and that are hard to sell, I'm trying to explain to people, start with the neighborhood. Have a video of the neighborhood, whether that's with the drone or handheld, then go into the property and then exit and end with the neighborhood. So you're really selling the lifestyle at that point in time. And for smaller condos, I think that's really important.
And is that something that you can do?
Oh yeah, we have stock footage of pretty much all the neighborhoods. It's been harder this year because everyone's wearing face masks and it just looks weird.
Yeah.
So, right now we've identified 20 neighborhoods that this year we're going to go back in there and we're going to be doing twilight neighborhood video.
Oh,
Twilights are always sexy.
Yeah.
Twilight photos are sexy. Like, it's just, you want your first image and your first impact on that property to be the most beautiful, So yeah, I think that the drone footage gives you that wow effect. The twilights give you that wow effect. It's also helping stagers understand when you have an indoor-outdoor flow to a property, we want to have a bunch of candles back there. So when we shoot it at twilight, it really lights it up. So we're I work closely with the stagers a lot of the times and tell them, please just buy a ton of candles and we're going to just light that place up. And so we can do twilight video at nighttime of the property, showing the indoor and outdoor aspect of the home. It's really important, because especially now with the pandemic, people are stuck in their homes. So we want to show people, hey, this is a great place for that purpose, the indoor outdoor feel.
Oh, I love that. And I love this idea of time lapse.
Time lapse are great. I was just playing with I've got a property coming up actually, and I'm obsessed with having the whole property shot in time lapse. But it takes a day and a half of shooting to do that. So wow. It's going to be properties that are in the millions and they have bigger budgets.
Right.
There's teams from, I'm Australian, there's a team from Australia that came and did a property here, and I think it was a $30,000 shoot, which is outrageous. But there's people out there willing to do that, especially with new developments, and those videos can be used for the builders as well.
So we're kind of used to the perfect property to photograph and to do all this with, where no one's living there anymore and it's staged.
Yeah.
What if they can't move out? How can they come up? Can they come up with any kind of beautiful imagery?
Absolutely. And the first thing to do is, if they have a garage, just declutter. I would still get a stager to come in 100%, even if they're not going to be staging. You bring in a professional and help you reorganize that house. So it has a staged feel. Stages no flow. A good stager, you know what I mean? I've gone to some properties where you have this beautiful indoor-outdoor feel, and the stager has put a big bulky couch right in front of the sliding door, and you're thinking to yourself, how now I can't show this indoor-outdoor feeling. In fact, any kind of bulky furniture, you want to get rid of it. The furniture needs to be low profile so you can actually see through the room all the way. Mm-hmm. So I think a lot of the biggest mistakes are, just because you can't move out or you can't stage, doesn't mean that you shouldn't be utilizing, stager's advice. Textiles, colors, things like that make the property pop. And of course, for some properties that aren't that pretty, staging actually takes away those flaws and you're able to view it in a more desirable way.
Yeah, we were talking about that, how sometimes staging is even more important on the less perfect properties.
Absolutely. Yep.
Yeah, makes sense. Do you have any funny drone stories? Have you ever been yelled at by neighbors?
Oh, you gotta love Berkeley. There, I was doing a shoot, and this guy came out with a shotgun
In Berkeley?
In Berkeley, and started yelling at me. And then he jumped over the fence, broke into the house, ran upstairs onto the deck, and was in my face yelling and screaming at me. And I'm like, dude, what you're doing is illegal. What I'm doing is legal. People, they think they're worried about their privacy. Well, the funny thing is, like, there's drones up in the sky that can zoom in and see your pimples, where this drone isn't able to do that. Like, I would have to be right in front of your face.
Okay.
Another story is like there was a woman in a high rise on the Embarcadero downtown San Francisco. She started throwing things down at me while I was flying. Then she came down and started like yelling and screaming, and I'm trying to wave to the cops to tell them, help me. They just laughed and kept going. So we have people who have this weird sense that their privacy and everything is being taken away from them when they see a drone, when more than likely someone with a regular camera could actually be more, can stalk them a lot better than a drone, put it that way.
I mean, who knew your work was so dangerous?
Yeah. I can't tell. I always tell people, part of me wants to have like a FAA, shirt on, like, and have something saying like, if you harass me, what you're doing is illegal.
Right. You need like some protective gear.
Yeah.
Any kind of final thoughts on what your advice would be to folks who are wanting to sell their homes, and what's the bottom line? Make the most money from it?
Well, it's been proven that the staging and your marketing, the right photography, the right videos, will boost up the price. I think a lot of the mistakes that people make, one, they're going to sell their house themselves, or they don't get the right realtor. What people have to understand is the realtors have teams,
Mm-hmm.
and they bring it together to make something special happen. To get a good price.
Not necessarily the realtor's team, but you mean people like you guys, the group that comes together to market the property.
Exactly. And
a lot of people behind the scenes, and the agent's the one who chooses how good or bad they are.
Yeah. There's a lot of companies out there, stages as well, and photographers that are just out there to get it done and walk away fast. And there's people out there that actually love what they do, and I think that shines through. So it's really a matter of getting the right people and knowing what's going on, and also walking away from the project and let us do our job. I think another big mistake with homeowners is that they want to micromanage, and they're in there. What they don't understand is that we're not there to make your personal style. We're there to make a clean slate so that everyone can view it and they want to come in and buy it. So one of those mistakes would be like, thinking that they have to have their personal style in the house or in the photos or in. It's often that's not the case. They just need to more so walk away and let us make it look sexy for them.
Totally. That's a great place to end as we move into the staging segment. I said this in my last workshop, but when you're selling your home, the best thing that you can do is hire an agent that you trust, and then get out of the way and let them do their job, and let the team do their job. And of course, you're going to want to know everything, is going to happen, but over project managing and micromanaging actually ends up putting a weird juju on the process, and backing off has an opposite effect of making things come together really nicely. So thank you so much for joining us, and I love working with you, and your product speaks for itself, and I'm looking forward to next year and doing some even cooler video stuff together.
Yep. Rock and roll.
Thank you.
You're welcome.
All right, Susie. Get you unmuted.
Good morning.
Susie Grenitz. I get that right?
Absolutely. It was perfect. It was perfect.
So you're with Green Couch Staging. Tell us a little bit about yourself.
So I am with Green Couch Staging. We are a staging company that's been in San Francisco growing for the last 17 years. I myself am a project manager for the company. So I will meet with the agents and or homeowners and do an initial walkthrough to develop a staging proposal. And what some people don't know, or, staging is of course about putting in the furnishings in the home, but it's really a much bigger process than that. It's a process that often includes pre-sale improvements. Mm-hmm. So, which, the whole goal of that is to present the property in the best light possible and to the broadest group of buyers. So it's kind of a whole package of staging and pre-sale improvements and a conversation about what would be best to do. And then with the goal, I like to say, of presenting aspirational living, so that when prospective buyers come through, they look there, they fall in love with it, and they think to themselves, potentially, I will have no clutter when I live here. I'm going to be an amazing cook in this beautiful kitchen, and I'm going to host great dinner parties. I'm going to go up to that rooftop deck and watch the sunset and have cocktails. Mm-hmm. I am going to live a better life in this new amazing home.
Yes, aspirational and the illusion of real life.
Right.
So actually, I have a surprise question for you that this made me think of. If you're a buyer and you're out shopping, and what do you want to not be fooled by when it comes in terms of staging?
So I think you really want to pay attention to the home, like the bones of the home and the floor plan. And is that going to work with you? I think we want them to kind of be seduced, so to speak, when they walk in by the beauty, the whole package. But I think as a buyer, you don't want to go completely down that path and lose sight of what is it that I want for my new home? How is it that I actually live in day to day? And what are my needs? And can this property meet those needs?
Mm-hmm. So really focus, try to look past, because here's the thing, staging really does work. And yes. I've worked with enough buyers over the years to know that buyers complain about staging constantly, and yet they like it too. And it's a rare buyer who truly can envision an empty room or grandma's old ratty flea-infested furniture and picture themselves living there. But so you're saying, though, if you want to go past that just to be savvy, is focus on the actual floor plan and what is beyond the chic furniture and aspirational cocktail party.
Right. But I think staging is so critical because, as you say, it's sometimes hard for people to visualize how the space might live if it's empty or if it's filled with old furniture and super cluttered. So you need the staging to kind of get them past that and then figure out if this home works for them. You absolutely need it. I mean, anecdotally, we know that staging and improvements, homes tend to sell faster and at higher prices when it's staged and properly prepped for sale.
What's the difference between staging and interior design?
It's a great question. So what we aim to do with staging is mimic an interior design, but in a super short time and typically with less budget. So at the core, it's really different because staging, in a design process, the client's going to be super involved. Design wants to create a space just for them, for their lifestyle, for their tastes, and they should be involved. With staging, as Daniel kind of referenced, it gets a little bit complicated when buyers get super involved. We totally understand that they have oftentimes difficulty detaching from their home. And they do have a hard time thinking, but that's not how I use the room, or that's not how I live there.
Normal. It's a big deal to sell your home.
It's a huge, huge emotional deal. I mean, and we really try to be respectful of that and kind of walk through the process with them. But I also like to remind them in a way that they're going to take all those memories that they built in that house and that they have with them. It's not the physical space, it's kind of those memories, and that they really need to try and let go when it comes to, they've hired the team, the agent who has the team that he or she trusts, and really let us do our work. I mean, I have a number of examples where we've had buyers who stay super involved and it trips up the process. It often takes longer, can end up costing more. And sometimes the end result isn't as good.
I think frequently. What were some, were there any design trends for staging this year, or things that you saw starting to change because of the pandemic?
Oh, definitely because of the pandemic. January, February, during a walkthrough, we used to say, nobody needs a home office. Let's figure out, everyone just pops open their laptop at the kitchen counter or the kitchen table. We don't need dedicated space. Completely flipped that when the pandemic hit and people were working from home. Now, a super high priority is to have at least some space, even if it's a desk in a bedroom, for working, in a space that you could conceivably close the door and hop on a Zoom call or have a private conversation. Even better if there's a dedicated space of some sort for the home office. The other trend is the indoor-outdoor living. Again, people were at home, so huge trend to kind of maximize that outdoor space and to make sure that the indoor-outdoor space flows. I know Daniel mentioned about not putting the big sofa in front of the sliding glass doors. We always try and keep in mind flow, again, because you're going to have prospective buyers walking through, figuring out how they're going to move through the space. So when we stage, we want to keep that in mind. How does somebody maybe move through that space? So outdoor space, super important, not only the staging, but the improvements for that outdoor space. Especially, again, photography, the improvements are super important because your first showing is going to be online.
Right. What are the most common pre-sale enhancements or improvements that you see in San Francisco?
Okay, there is nothing more important than fresh paint. I mean, that I think is at the top of the list. Even, I would say, if the color is not what I might necessarily choose, but it's a good enough color, that you do a refresh paint, even if it's just a top coat. There's the new paint smell. There's just the wear and tear from normal living. Even if someone lives super pristinely, as soon as they move out, there's going to be just nicks here and there, always. So paint, floors, we often do. Paint, floors, lighting, and landscaping. I think if I kind of had to prioritize top 4, but we go as deep as doing countertops, hardware. There's so many things that can help elevate a property. And one thing that we've found and that we've heard during the pandemic is that there's less bandwidth for people to move into a fixer-upper.
Yes.
So that doing those pre-sale improvements are super important so that your house is ready to go. And there's a lot of competition out there, as you mentioned. There's inventory out there, and the competition is stiff. So you want to make sure your property is in tip-top shape.
Yes.
And I think one of the biggest mistakes is not doing those pre-sale improvements. And I understand it costs money, but as we learned from Ricky, you can offset some of the gains by doing those improvements, which are just day after day, we know are important.
Yeah, and I think that's a good point. People do seem to have less of a bandwidth to do stuff, and there are things like you talked about, hardware and countertops, where you're not remodeling the kitchen, but it looks like a refreshed and updated kitchen with some of these minor things. And I know at Compass, where I'm at, and a lot of the other firms, I think, have similar programs that we have money allocated for our sellers to pay for these things at no additional cost, just to kind of ride out the cash flow during that intense period of moving and buying and selling, so that we can put all this together so that you end up netting more money from the sale, and then bring that to your accountant on your closing statement and keep your receipts, for sure.
Right.
I totally agree with you. Is there ever a time when you think staging's not necessary? I mean, the bias, obviously, that's your job, but do you ever walk in and say, oh, you don't need us?
Typically, I would say there's kind of the two extremes, potentially, when you might not need staging. When the house is obviously a complete gut job, it would be a little bit like putting lipstick on a pig at that point. Like, there's just no way that you're going to fool anybody, and it would feel a little bit silly doing this high-end staging with no improvements in something that is obviously a gut job from the get-go. And then the other extreme is if you have a newly renovated house, highly designed, but not distracting and lived in kind of minimally, that shows well. I think those are kind of the two extremes, but we don't typically see that.
Right.
I mean, you know, everybody that works at Green Couch says we would have to have our home staged.
Me too.
You know, right? I mean, we live very differently than a home that is staged. So everybody could benefit by decluttering, moving furniture, getting big pieces of furniture out, taking out personal items, and cleaning up. Again, there's just wear and tear from everyday life that we start to not see when we're in the space ourselves,
right,
that buyers will notice when they walk through.
Right. And that's some of the benefit of having professionals who are going to be more objective in that. And I think the stager plays a vital role on that piece too, because the real estate agent is personally involved with the client, and the stager can come in and be even more of a neutral observer for some of the things that need to happen. I'll end with this for you. There's a reason why I brought you guys in particular onto this panel, because you do provide a more elevated and elegant experience to the real estate sales. Speaking specifically for Daniel and Susie, Ricky, because I trust his tax advice. But when it comes to marketing, there's a lot of different types of stagers too. And Green Couch, definitely, you guys are not the cheapest show in town. And do you think that, again, you're biased, but do you think there's a difference between the staging that you see out there in the market and how the sales actually go for people?
I do. I feel like for Green Couch, we, have been doing this for a long time. The stylists approach each project individually, and it's really curated. It's not a set plan for properties. There's not this sofa always goes with this chair. There's not a single color palette that runs through the house like, oh, this house is going to be blue and that's going to be our accent color. We really work to kind of create an eclectic look. And as I said in the beginning, a look that looks like it's interior design, except in 2 or 3 days. And, we're constantly updating our inventory to stay current, because buyers are smart too, and sellers, they're smart. And then, I'd like to say we really go the extra mile for the customer service. And you know, we will make edits where we think it's appropriate. I think we provide a great product.
Thank you. And we have here in San Francisco, we have a very educated, intelligent, thoughtful group of clientele that we work with and that we interface with, and everything about the real estate transaction has to or should operate on that level because of, you know, where we are and what we're doing and the magnitude of it in people's financial books. So this was great. I like to end right on time. We're 2 minutes late. Does anyone have any questions from the audience? If you do, you can chat them to me. And I'll just say that I really appreciated the group here. And I think 2021, I mean, I don't know. I certainly didn't expect 2020 to go the way that it was going to go. So I can't say that I have any clue what's going to happen in 2021, but I'm feeling pretty good about going into next year. And I think we just keep doing what we're doing and adapting and going through it. So thank you, Ricky, Susie, and Daniel, and thank you everyone for being here. I'll send out the video with everyone's websites as well. And if you have questions or follow-up, always please reach out. And I'm Danielle Lazier with Compass here in San Francisco. Take care.